Emerging market economies concluded deals worth $512 billion last year, contributing around 23% to global mergers and acquisitions. This is according to the Mergermarkets report for the first quarter of 2013. It also showed that BRICS nations sustained emerging market activity with a total of deals worth $127 billion. That's up 121%. Now, this was the largest increase in merger markets on record. Joining us on the line to delve further into this, joining us from Paris, in fact, Baranja Gwil, the editor at Mergermarket. Baranja, thanks so much for joining us. So I suppose let's just kick off on that view and the role that emerging markets are playing right now, specifically the role of BRICS, because we just had the BRICS summit here in Durban. It's said that BRICS nations aren't investing in each other. They're more investing in developed markets. Is that the case?
Well, yeah, I mean, it's the case to some extent. I mean, you can see that in, I suppose, the increase in cross-border activity for the quarter. And, in fact, cross-border activity accounted for 35% of global deals for the quarter, and it's up from 28% in Q4. So I guess, you know, that's one of the encouraging signs we're seeing in terms of activity, whereby there is more and more cross-border activities. And obviously, this is also due to emerging market players buying, you know, into emerging markets and also on occasions into Europe and the US.
Now, there were said to be 4 mega deals that basically pushed quarter one deal value to $405.9 billion. But paint the scene for us. Give us a global overview of where M&A activity increased and where we saw declines in M&A.
Sure. So, I mean, first of all, you have to look at last year. Last year was just kind of on par with 2011, and then, you know, this first quarter is a bit below what we had the first quarter last year. So it's 10% down. So that's globally with the total deal value of just over $400 billion US dollars, according to Mergermarket data. In terms of geographic breakdown, I suppose you could say the US and also where you are in Africa show quite good resistance and show a little bit of increase. And then obviously for, you know, because of the, I mean, among other things, but mainly because of the Eurozone crisis, you know, Europe obviously slowed down quite a bit in the first quarter. And then Asia was also a little bit down with a total deal value for the quarter of $60 billion.
Interesting. In Africa, EFG Hermes rather moving to the top of the league table when it comes to deal value and really coming out on top ahead of the likes of, you know, the usual suspects like JP Morgan, Morgan Stanley, Goldman Sachs. But that being said, just take us through the type of activity specifically in Africa and what it was characterized by, which sectors, who's investing here?
Yeah, sure. I mean, so yeah, as I said, Africa resisted very well, actually. I mean, there's been a few big deals there, meaning that the actual deal value for the quarter almost doubled compared to last year and amounted to more than $18 billion. And I think one deal that is particularly interesting, I suppose, was the acquisition by China National Petroleum, the acquisition of a stake in ENI East African assets. So, you know, showing really that China is ready to invest in Africa's energy supply, and that's you know, that's been a driver across the globe, really, like this need for energy assets, and that was exemplified by this deal in Africa.
Yeah.
And also the telecom sector also has been quite active globally, and again in Africa with the Orascom deal. So I think Africa has shown, you know, some good signs definitely, and also like is showing some of the global trends we're seeing elsewhere.
Yeah, let's just look at the private equity space, because global buyouts, $84.8 billion. That's the highest level they've been, highest quarterly level since quarter four of 2010. But on the exit front, I mean, still paltry levels and, you know, levels that are declining on the private equity exit space, down 34% on a year-on-year basis this quarter from quarter one 2012 at $32.8 billion. What's the view right now as to why why we're seeing such declining volumes in the exit space?
Yeah, I mean, obviously, you have to remember that corporates, despite having quite a lot of cash on their balance sheets, they remain cautious when it comes to M&A activity, and this is shown in the overall figures we're releasing. I mean, that's one reason for the exits being sometimes difficult. But the fact that global buyouts, as you mentioned, have seen their highest quarter since 2010. That shows that there is appetite for risk from the private equity funds, and there is also they managed to find those deals, especially in the U.S. There's been 70% of the private equity activity has come from the U.S. So there has been that's one of the encouraging signs, I guess, when we look at what's going to happen this year.